The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and thank you, Steve, for 2 great hours. I'm here Monday through Friday, 11 o'clock till noon at 877-927-6648. Love to take your calls. Hey, great time to do it. A tidal change has been occurring. If you don't recognize it, I'll go through a couple of things that would say we're now looking at a period where there is a story. Before, we just didn't have a story to be able to short the market indexes. Now at least there's a story. The story goes every couple of days. Well, it starts off every couple of weeks, and then it goes days. Now we're getting into, I wouldn't put it every hour, but it's getting close to intraday moves. And that tells me that you've just got to be really, really careful at this particular point. Couple of reasons why. And there's one that is couple, and it's 3 letters, VIX, the volatility index. It is starting to rise and make higher highs and higher lows. Got to watch that. Talking about higher highs and higher lows, that's the methodology that I use, a very, very simple methodology in concept. You go from the lowest, most identifiable low bar, and you merely count each successively higher peak. Let's just check this one out. Yes, a 10-minute chart of 6066.50. 6066.50. So we've got right there. Lowest low bar. I use a slightly different technique in the futures. Go A to B to C to D. What do you want in the Chapman wave methodology? Choose the most identifiable low bar and merely count each successively higher peak after that. So you go D, and you want to get to at least 4 higher peaks. At that point, other things can happen. And they do. You go to D, and then suddenly, let's see, D would be right there. D is formed at between 7:50 and 8 o'clock this morning. And then it goes to an E, a higher high. Then it tries to tackle the 200-period exponential moving average, fails, pulls back, and then has a sudden up spike. At this point, I'm just calling this F for now. There's no other reason. There's no reason why I shouldn't call it F. Could be an A. If it gets to a higher high above 1679, I'll call it something else. But in the meantime, this says you can put a down arrow. Well, stochastic is down. I'm still going to put a down arrow based on the chart formation. Okay. So that's basically the simplicity of the technique. There you are, right there. Put a plus sign, put a red plus sign. That's the way I always do it. And we've got the technique, and that describes it. Later on, I'll show you a couple of other things to do with the waveform. But in the meantime, that's what I'm looking at. Why am I looking at this? Because there was a peak D in the SPY and the E-minis, in the December E-minis. Peak D is where you expect that there can be, there doesn't have to be, but the greatest pullback. Now look what happens. Pulls back, but it is making a cup formation. However, once you start getting the bad news, and I must admit that the volatility index, I was waiting for a leg D. Whoops. Leg D. VIX, and today we got the leg D. Come on. This is the chart you want. There you are, VIX.X. And there it is. Leg D, but the stochastic is at 78%. I'd prefer if it was at 80%, but it is climbing. It's still strong. MACD is very strong. That tells me that we started to make a cup formation, broke out of it in a cup and ladle, Chapman wave ladle formation. How we test 1781 is going to be really important. If, in fact, it holds with a high-level consolidation, leg E up in the 120-minute chart, but only leg B in the weekly chart, and that to me is key, because at any point, if it breaks above that downtrend line at about 20.40, you would expect at 21.91, the high made back in May would be the high to challenge, and that would suddenly start leg C up as the 200-period moving average in the monthly chart is becoming very familiar. The more times you challenge a particular resistance points, the greater the chance of, in fact, moving higher. So now what I'm looking at is the volatility index is, in fact, a very important component of at least the work that I do. Now, I'm going to go to our first caller. We've got Garrow in Newport Beach. Hi, Garrow. How are you?
How are you, sir?
Very well, thank you.
All right. calling regarding Chevron CVX.
Yes.
Today I bought it 300 shares at 117.25, which was the bottom of the August 21st was 117.22.
Correct.
I put 3 more cents on top of it. I bought 300 shares of that. Now I'm not sure to hold him or not. Should I dump him and wait for a better opportunity? Or because it gives me a conviction here. I can see the arrow. It gives me a green arrow with a green candle on the monthly chart. But the weekly chart is not good because it's below it's all these moving averages. So
correct.
I don't want to be tempted to hold them. I needed your professional opinion, sir.
Okay, thank you. Garo, we're looking at CVX, which is Chevron Core, trading at 118.09.04. Garo has a real nice way of being able to time entry points, and he timed this very well this morning. The low was 117.21. One penny below the left side low bar of August the 21st at 117.22. So now it's real simple for you, because what I would do, now the plan that you had was, I suspect that you actually wanted it to get going before you put in more of the details, but my thinking here, because in a sense it could be considered a dividend stock, and my suspicion right here is that we are going to have a test of the strength of those dividend stocks like Procter & Gamble, etc., that just got smashed to the downside. Chevron hasn't been smashed to the downside, but it is one of its deeper corrections, going from 127.83 to the 117 level. So that's 10 points. That's still not 10%. It's only about 8%. So here's the easy thing to do. I like the action right now. The 120-minute chart that I just picked up, let me just quickly look at it, left side, right side. I'm going to squeeze a little bit. Okay, that's the 120-minute chart. Beautiful. Now, the candle that I would have used is right there. So that would be, it's almost a left side, right side. I'm going to make the suggestion that says that you probably would have had a little more than a 1 point stop, right?
Yes.
Okay. So I'm going to suggest, because it's run off the low of 117.21, almost a point, about 3/4 of a point, that you raise the stop. In other words, you were going to go for your entry point is what? Is it about 117.30 something?
No, I bought it 117.25.
25, perfect. 4 cents off the exact low. That's fantastic. Okay. I don't know if you even want to give it a point, because if it goes to 116, it's going to show failure formation. And then it might back and fill for a little while between 120, I'd put it at 120 to 121 on the upside and 116 to 116.15 on the downside. I love your entry point. Why? Because your reward will be, if it closes over 118.63 in the next 2 days, you can anticipate at least it'll try to get into this ugly candle of the 3rd of October, that's Thursday, between 120.66 and 118.59. If it's going to fail, by the end of the day, it'll have given back most of the gains, probably won't have taken out the 117.21 low, but will get close to your entry point. That means there could be a gap down tomorrow, and because it's been in a very weak sector, that means you're a little bit at risk. So here's my thinking. I want to try to be on the same plane as you. The risk reward says you've got a point to the downside, and at best, if everything works out and it doesn't become a victim of another down swoop, which I'm anticipating in the market, then the 120.41 level would be the strong resistance to 121.20. So that's 2.5, maybe 3 points on the upside. I wouldn't even give it more than 3/4 of a point on the downside from your entry. That's the way I would look at it. And the only reason why, normally I would say to you, great entry, it should go into a rectangle formation, try to get back into the weekly chart, at least to 121 to 122. It looks like this is the opportunity. Not in this market. So I would be tightening up in fact, I'm going to make it even better. I would tighten my stop to 1 penny, make it 5 pennies below today's low of 117.21, somewhere at make it 117. That's my stop. Now, if by the end of the day it gives back most of the gains and it's only at 117.50, because there's a chance of a gap down tomorrow, if that is the case, and then you won't be able to control your stop, I don't think it doesn't have a history of gapping down more than about a point or so, but you never know. So I'm going to suggest that if it starts to pull back by the end of the day, bring it down to 200 rather than 300 shares that you've got.
I see. I see. Do you think this is going to gap down tomorrow?
I'm saying that if the general market starts to fail by the end of the day, we could get a gap down tomorrow, which you have no control over. So make the stop a little tighter as it gets into the end of the day. If it's closing up now at 118.04, big deal. Gaps down $1.50. You're still looking pretty good. It's still less than a point from your stop. But I'm saying to you that the risk reward, if it becomes the sector that offers the best bounce opportunity with capital gains and dividend gains, this is the stock that probably will have a chance to be there. Now, I have to tell you, you can see my charts. That monthly chart is saying, I'm calling this a peak F in Chevron because the stochastic has pulled back under 80%. Stochastic's holding okay, but is lower than it was before. And the MACD, well, the month is only not even half over. It's just begun.
Right.
The MACD is just turning down. So I don't want to talk about the monthly as if it's the end of the world, but I do want to say, if this turns out to be peak F, Chevron is making a hat-trick top that could take time and price as it starts to test the low 110 to 108 area in a couple of weeks. And that's all I'm afraid of. So it has to prove itself right now by bouncing back in the weekly chart into the it's 118.04. It really has to. I don't know how it's going to do that unless, as I say, it becomes a dividend-favored type stock. And if that's the case, it should. Then your eye was exactly right. Your thinking is exactly right. Your timing is exactly right. Now you've got to just say, hey, Chevron, I've done my job. Now you do your job. And my eye says 119.30 is the 200-period exponential moving average resistance. If it can close above that, we've just barely started the week. If it can close above that by Tuesday afternoon, Wednesday morning, all of a sudden I'm saying to myself, wow, Garrow has got exactly the type of stock that can work in this environment for a couple of weeks. So I hope that helps you. But my only concern is if it takes out 116 at any point, that's the low that was made in the week of 28th of June. It's not a good chart because the Roman candle wick of 114.12 on the week of the 19th of April will beckon. So good luck on this. I think you've got a great entry. Let's see how it works out.
Thank you, sir.
Thank you for calling, Garrow. Always like to hear from you. We'll be back, folks. Dow is down 96, S&P's down 9.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. And let me just do this here, if you don't mind. Just need to just type this in because I just wanted to be able to get that in. And here we go. All right. So what we're looking at here, folks, is the Dow is down 92, S&P is down 8.43. Dow is a little bit weaker than the Dow. I'm just trying to check all this stuff out. It's 0.61, down 0.61. S&P is down 0.49. Couple of things are going on, and I want to just go over that. I've just been trying to set it up here so that I can actually see it. And I just wanted to see if I'm getting your, let me just double check here. Give me 1 second. That's that. That's that. And that is that. Yeah, I just wanted to be able to see these charts as you're seeing them. Wanted to expand a little bit. Now, when I look at all these different actions, see now CVS is up 0.02. It's at 118.15. Garrow got a great entry point. That's kind of what you want to see. The stock has plummeted down to the bottom. The stochastic's now at about 8%. And there's a chance, because of the MACD starting to, it's not as low as it should be, so it has a chance just to bounce here. These are the stocks that I was trying to scan quickly during the break. Now, I had a question. Z had asked me if I would, in the den, about the debt ceiling dispute. And he said, is it designed and executed by politicos and bankers to create a crisis? I'd like just briefly to talk about that issue. Years ago, I'm really talking years ago, when I used to do a lot of options trading, and especially at options expiration, my conclusion on assessing I'm not a psychologist, but the mental psychology at the time, as I could perceive it, given my own background, etc., so from a very naive kind of point of view, but I try to make it as simplistic as possible. So simple and simplistic are not quite the same. Simple means as simple. Simplistic means that within the context of my very limited view, but having been involved in the markets for a very long time, I try to assess what happened on options expiration. And then the word that often went out is, they did this. They pushed it. They did that. Who's the they? Well, the they is the cumulative effect of us. It's like in politics. They voted so-and-so in. Yeah, sure, because X number of people signed, and that's the number that was counted, and it was the winning number. So now let me just go through now. Let me go step by step. Maybe, sometimes my thinking is something I've done internally for so long, then to expel it, to talk it out, I have to try to make it as clear as possible. So there was a quote by one of the White House, one of the higher ups in the White House a couple of years ago, to never let a crisis go to waste. Now, let me just put that into the perspective as if it was the options expiration. The Dow, the S&P are absolutely great. It's Thursday. And then suddenly at the end of the day, there is options expiration coming up the next day, and you see a sudden pullback. Now, the next day, the market is pulling back, and then out of the blue at about 220, maybe 305, you suddenly see a spiral to the upside. Well, I've spoken to enough insiders in the business when they used to have options, when people cleared their, actual people instead of electronically cleared all these different things. And I've also spoken to enough CEOs over my lifetime to try to put this together. And my thinking really is that most insiders have no clue. They're busy running the business. They're doing this thing. I'm talking about their stock market activity. Most of them are just doing what they can. And if the stock goes, sometimes they look at me in absolute bewilderment. So I don't know how it went up, or I don't know why it went down. Everything looks great. So my thinking is this, that when you're getting closer to some kind of a crunch, what happens is there's a nudge. Now, I put this into the context of when I used to conduct my chamber group and conduct an orchestra. I didn't have to look at every person and say, louder, softer, quicker, slower. There were gestures, or there was just a minimum eye contact, or the big solo came up, and about 2 bars before, I'd look at that person, getting them ready for the solo. That's all. Nobody, if you weren't looking, you wouldn't see it. But that person and me, we had the synchronicity. We had this eye contact. The nudge. And the nudge effect is getting closer and closer and closer. Yeah, that's different to Lennon. I'm not talking a nudge with an axe. I'm talking about just that inflection point that says, I'm vulnerable to going up, I'm vulnerable to going down. Oops, you just pushed me over and I'm going down. And then everybody climbs on board. I'll talk a little bit more about that in practical terms as we go through this.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. So I'll go, there's no rush. Over the period of the next couple of days, I'll go into this whole aspect of the nudge. And all I'm saying is that sometimes the actions create the opportunity, even though you weren't anticipating it. And then once that opportunity is recognized, there's the pile-in effect and affect. And I'll talk about that. So now I want you to just go, I'm showing the Apple chart, got an upgrade today. You know, Apple is, as Jane the Den says, it's an interesting chart. I've got a pattern here that says it could break out. It's struggling really hard. But there are enough stocks that I'm looking at here that show internal strength, mostly on the weekly charts. This one happens to be showing more strength, not on the weekly or the monthly, but actually on the daily chart, acting quite well. But all I can say is the levels to watch are this. If Apple starts to break down underneath, it's at 491.45 right now, up 8.47, that's 1.75%. But starts to close underneath the 9-period moving average at 484 and actually takes out the 478.60 low of the 4th of on Friday, then suddenly you've got yourself a completely different price pattern. Because this resistance that we're looking at, I'll open up the chart, that what I call the falling axe, and there was a potential for a huge gap down and then a gap up. It's very unusual for Apple to have these kinds of gaps. The gap up and gap down is really telling me that Apple could be stuck in a trading range for now, holding quite well because it was beaten down from 705 down to the 370, was it 385 low, 385 low in April. So if that's the case, Apple's going to be a contender to be helping the Qs. Now let's just run through these, because this is, of course, the beginning of the week. Let's run through this one at a time. INDU. The Dow itself has gone to a leg D. At this particular point, leg D is where you can expect some kind of a bounce. And I'm saying a bounce. I'm not saying a major move to the upside. You never know in politics. But look what's happened in the weekly chart. That weekly chart just nudged. Talk about nudge. It nudged that downtrend line. It actually touched it and went below it, and it's still below it. That's a very important inside track Chapman wave method that I use. That distance between the green line there and the red line in the weekly chart. Now look at this. It turns out that 15.157, 15,157 on the Dow is the 9-period exponential moving average. It's trading at 14,997, just underneath 15,000 right now. And the monthly chart constantly bumped into that resistance, the same inside track, except this time it's on the upside, a rising channel that I call the inside track, but it's really a rising wedge formation. That says that at some point over the coming couple of months, in fact, some tests of this support level. First support, major support, is at 14,742, the 90 EMA in the monthly. As the month is progressing, we're starting to see a faster moving average cross the slow moving average of the 9-period moving average. That's a potential resistance. And we're looking at, in the month of October, the level of 14,200 all the way down there as the support. You break 14,000 on the Dow, something else completely is going on. Those are the worst case levels. On the upside, obviously a break of 15,709, very positive, except you still get into all these resistance areas, but it can take you all the way to 16,000 points higher, 16,297. Well, let's call it 600 points higher. So in the meantime, we have to go from one time frame to the other. And you can see these cup formations. Normally what happens to these cup formations, the third one, if it doesn't decisively break above the previous high, creates a much deeper cup, and that's really pointing to the 14,700, 14,600 as a test of that particular pattern. I should make it smaller because it's really just to there. So, right, whoops, didn't mean to move that, excuse me. Okay, now let's look at the S&P. Those are the parameters to look at. On the S&P, SPX.X, what we're looking at here is that pattern is forming a cup formation. It's trying to hold the low of 1670, what was that? whoops, give me a pointer, there it is. 1670.36. 1670.36. That is very important support for, I would have to say it's one of the most important support levels. You break into the 1670 to 1638 level in the next 2 days, I can't see this not going into that long-legged candle right there. And that's the candle of the 8th of September between 1664 and 1640. Somewhere in there, and the body of the candle opened at 1657 and closed at 1655. That would be my target on the downside. Okay, upside, breakout, you'd have to cross 1696. You'd have to cross 1698 to 1702 to really get a big cup-shaped formation that says we're going back to the highs. Even though the weekly has an alternate count, at this particular point, I don't really see that. So I wanted to go through those. I want to quickly do the IWM. IWM is, of course, the iShares Russell 2000 ETF. And in fact, the high, I haven't yet been able to, I will probably, I should do that. All the technicals say that I should put a down arrow right there, and I'm going to do that. That means it can go higher, but it says be careful because there's a good chance with the MACD turning down, stochastic at 66%, and this particular formation that is going to be at best in a trading range. It's at 106.30, down 72 cents, 106.90 or 107.30 should be very strong resistance. Anytime this week it takes out closes under 105.24, you can even go down to fill in the gap down between 104 and 103. So far, it's acting quite well, only down 0.74, making a high-level consolidation. But I'm watching the weekly chart. Is the weekly chart with the stochastic deflecting lower, the stochastic at 91%, is it still showing internal strength that says 104.91 is major support, but there's a chance that you could go higher by next week to leg D at 107.94? Or is this really peak G? I just don't know, and I don't have to deal with it right now because the shorter term is what I have to go for. The monthly is in leg E. I'm very concerned with these D, E's, and F's in my monthly charts for so many of the indexes. Now let's look at the Q's. The Q's are in fact leg E in the 79.76 is the high. Most recent high on the 2nd of October. It's under the 9 EMA. I looked at so many. I don't know if I can do that. Should I do that? I'm going to have a little race. Let's see. It's we've got about 15 minutes to go. No callers. Watch this. Watch this. Did I just say watch this? Will I find it now quickly? I'm going to find it. Let me just go to here. Okay, give me 1 second. I'm going to show you something really interesting. Favorites. Go to this one right there. And while I'm doing that, let me show you something. It's coming up. Yep, it's come up. Now I get rid of this. Always a little cumbersome on this chart here. I don't need it. I want to go to... Oh, it doesn't recognize me. I'll just put my name in here. Got it. The reason why I want to do this is because if you see what I'm seeing, you will turn around and say, oh, okay, a limited upside maybe. Doesn't say how much, but it does say, okay, I'm ready. Here we go. So we've got, let me run these down. These are IBD top 50. I will not do the top 50. Watch this. Fleet Core, FLT. Haven't finished it. I thought I had finished it. Oh, I remember what I did. GMCR. Green Mountain, it's made its high, made a hat-trick high, struggling, really working hard. I think it's got a limited upside. Look at JAZZ, Jazz. Nice name, Jazz Pharmaceuticals. Peak E-top at 93.84, pulling back. Leg F, possibly a peak F. I won't know on the weekly. And the monthly is in leg E, extended. But as of now, it's going to be the daily that's the rudder that drags these things lower in the NASDAQ biotech sector. So Jazz Pharmaceuticals, ADS PLC, trading at 88.71, down 2.28. Here's another list that I found. Actually, this is the one I should have looked at because I had it right here. Yeah, let me go through these. This is on the Investors Daily, stocks on the move. In fact, I thought this was very interesting. Out of all of these stocks, let me just show you something. SN, I hadn't done SN. That's N for Nancy. This is called Sanchez Energy, and I haven't finished. Did I not do this last night? STZ. This is how embarrassing. Did I not do these? Is this another chart I'm looking at? What's going on here? Did I lose my letters? Okay, KKD, which is being Krispy Kreme donut, had a fantastic move. It's at 22.52. It's just gone peak A, B, C, and leg D. Huge leg D in a cup formation. It's getting very close. This is a C and a D right here. So it made a previous high in the weekly was D. I think it's getting close to some kind. I have to put a down arrow, even though it's come back, close to a double top. So I'm looking at stocks, even though they're looking really good. And I have to admit that even really good-looking stocks, we've got a stock now that's up about 2% on the day. There's a chance that if by the end of the day it starts to weaken and it is only up 0.33%, let's say, that it could start to see selling tomorrow. So I'm looking at some of these stocks that could turn out to be quite vulnerable. Did I not do all these? Yeah, AET, Aetna. There you go. AET. Peak D top in the daily. Peak F, I believe this is a peak F top in the weekly at 69.19, and a leg E. No sign yet of a top in the monthly. But look, the weekly technicals are turning down. Daily technicals are turning down. And these have been monster stocks, absolutely monster stocks on the way up. So when I look at this, I'm saying to myself, yeah, WX was another one. WX, leg D, nice cup formation. It's Woomi Pharmaceuticals. I think it's Pharma Tech. It's called Pharmatech in the Cayman Islands. Leg D in the monthly, possibly leg D in the weekly, and now it's just starting to bump into resistance. So I'm looking at the best stocks, and I'm saying some of them still look quite good. They are the ones that possibly could keep this market going higher, but at the same time, this rotational aspect is the one thing that's got me on the one side saying there could be a high-level consolidation, and on the other side saying, wow, some of these stocks are just way, way, way too high. And what's going to pull them down? Look at the Celgene, SCELG. Made a peak F, maybe it's a G, or a G/C at the top here on the daily, but it's leg E in the weekly, G/C in the monthly, and with the doji candle, but it's the first few days of the trading month, so I can't talk about that. Stochastic is good, MACD is good, in the weekly it's good, but the daily is saying, I'm starting to find some kind of resistance, a lot of resistance, and I got to watch that real closely. So we have some longs. We're beginning to have more shorts, and that's the way I feel I want to trade this. And more importantly is that I'm following the VIX very closely, because as long as that VIX is pushing towards the 20 area, it says to me, be careful on the long side. Not everything is the way it seems. And when you look, I don't know why I haven't got that done. Oh, here's another one, LAD. In the Investors Business Daily top, this is like top number 6, I think it is. Peak D in the daily. This is Lithium Motors. I bet most of you have never, ever heard of LAD, Lithium Motors, car dealership in undercovered areas. Well, it's a leg D in the monthly. Looks fabulous. But the weekly chart has gone to an F. And it's saying that if there is a start of a move down, it's at 71.23, down to $1.43. If it starts to take out that Roman candle wick of the 23rd of September, is suddenly 69.71 as support is going to be really critical, because 69.27 is the weekly. So all I'm saying is that there are some stocks that have been absolutely monsters on the upside, just fantastic. The monthly charts are still not giving any signals. The weekly charts are just beginning to, and the daily charts are saying, be careful. In fact, I do have to put a down arrow right here, because everything about that is gone under the night, closed, under the night, it's already closed under the 9 EMA. MACD's weak, Stochastic's weak. If it goes higher, then I have to maybe relabel, but that's the way I'm looking at it right now. So I'm just trying to go one by one through all these different sectors. Look at Lumber Liquidators, just been a monster stock on the upside. Now I've got an alternate count, G/C in the monthly, G/C in the weekly. That says, gee, you're going to have to wait for more evidence, because G's are a little unusual in monthly charts. I shouldn't say a little. They are very unusual in monthlies, not so much in weeklies. But that alternate count still says the start of the rally was back in LL, Lumber Liquidators, trading at 104.75, minus 230. The start was back in June 28th at 71.63. Well, it's gone to 115.59. It needs a rest. I'll be right back. Basil Chapman, Tiger Technicians Hour. We'll be right back looking at LinkedIn and Trip.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I had a question about LinkedIn. LinkedIn LNKD down 5 at 239.92 in a big consolidation area. And the pattern that I'm looking at is that H pattern that I often talk about. Looks like that with the arch formation. Failed to get to the previous high of 257.56. Now what I'm looking at is it's a good chance to test this Roman candle wick of the 23rd of September. So if it gets into anywhere into the 236 area, really good chance it'll test the low of 233.16. The weekly chart says getting a little tired. That long-legged candle of the first of all, the little doji candle of September the 13th, the week of September 13th at 257.56 at the high. That's something to monitor. The monthly chart has that same candle in a larger form, and that says we could pull back, have a quick, brief touch again of the open and closing 243 area, and then it'll pull back. So I think LinkedIn is due for a rest. At a fantastic move up. If you're in it, I would say it's not a bad idea. If you've been in for a while, take a little bit off now and plan on putting it back if it ever gets to the 220, that major, that serious uptrend line right there, that inside track zone, somewhere between 215 and 208, somewhere around there. I'd be considering that that's a great place to start putting that money back. So if I'm looking at, and also a quick question about the EM, so the foreign markets, EM, holding okay. It's got that very strong resistance. It's got that falling axe formation, but it has to prove itself by decisively breaking the EMS, that candle. Once again, you've got a long-legged candle, that's indecision, and that says that the outer boundaries might be taken out, but you're going to come back and touch, and exactly what we've done right now. You've come and touched the middle of the 187 open and 4208 close of the week of the 20th of September. That's going to be the pattern. So I must say it's a better looking chart than some of the others we've seen that are coming off bottoms, but at the same time, it really has to decisively break above 43.32, and it's at 41.84 right now. Now, real quickly, I want to do a couple of things. In my CD introducing the chart wave methodology, this is what you look for. You see, they're just bars, and now look, there are candles. Now look, there's also a particular candle right there. Very important candle. You know, Steve also likes to talk about candles. I like to talk about candles. That's the candle with the lettering A, B, C, D, E, F. That's where you got to be careful. So that's the methodology that I employ, and together with other things. And if you look in my, if you look at this particular chart right here, look at all the information. This is a peak E in the 120-minute chart in the VIX. This is what I show my subscribers every day with a really detailed look at each sector. This is the Dow 120-minute chart. Big push up, push down, Roman candle being formed on the last 120-minute chart. If that Roman candle gets into 14.9447 at any point, the Dow is at 15,009, it goes right back and retests the low. If it can hold, it's got a lot of resistance at the 14,900 to 15,020 area, and we're at 15,010. So that's what I'm looking at. And the volatile index 120-minute chart is E. The trend did go to 159. That's not particularly high. It's nothing that I would make a big deal of. It is leg D on the downside of the Dow, but still trough C in the daily S&P. Now let's just take a look at this. If I'm looking at different sectors, look, NGZ. We've been speaking about this for a while. That's the natural gas. It is making the H to an M pattern. It is trying to form a base. So I'll go a little bit more into this in a little greater depth tomorrow. The different sectors that I think are working, and I will, for my subscribers, we'll be looking at these different sectors, and we'll even follow Garrow's CVX, Chevron, and see if that's a dividend stock that might have a bit of a play in it. Thanks for being here. Stay tuned for Larry Pesavento, and should be great programming all day. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.